pre-qualification? Well, I'm sure you may have come across these terms before because you're likely looking at getting into the market and buying your first home, and you want to know exactly how much you qualify to borrow, you want to know what your rough monthly payments might be, and you also want to know what other costs you might come across when making this purchase. Great news for you, that's exactly what this video is for, specifically whether you should get pre-approved or pre-qualified. Hey guys, my name is Jared White. I'm a mortgage broker here in BC, and my job is to help first-time homebuyers get into the market, specifically with arranging their mortgage. So we have access to all the different banks, and we basically help you determine which one might be the best option and guide you throughout the entire process. Before I dive into things, if you wouldn't mind, please hit that subscribe button, like this video, and ring the bell to be notified. It would mean a lot, and it really helps me grow this channel and get in front of more people just like yourself. Okay, let's dive right in. So it's important to understand that when you're buying a home, it's a pretty serious process. Let's be honest, you're spending at least $250,000 all the way up to $500,000 potentially on your first home, and in some cases even more. So you're going to want to make sure that you're very cautious and you have all the information you need to move forward. Having accurate info in this process is going to be a huge advantage for you with your negotiations when you're making offers on homes, and also just reducing your stress throughout the entire process. Now, the key difference between a pre-approval and a pre-qualification is really just the amount of planning done before actually looking at homes. Now, a pre-qualification is simply just a rough estimate of how much you can borrow. Sometimes it includes how much your monthly payments might be, and you can get this by simply just walking into your bank, or quite honestly, you could simply download like a mortgage calculator. I have one that I'll put in the description that you can download, where you simply take a test, answer a few questions, and it spits out a number that you'll be qualified for. Now, the question you gotta ask yourself is this pre-qualification something you should rely on? And the answer to that is hell no. And the reason why is it's really reliant on the information provided by the user, and you would be the user in this case. Now, it doesn't really matter whether you do it through the bank or through an online mortgage calculator. The main issue comes down to income, and that you're supplying how much income you make. Now, I'm going to make that make sense in just a second here, don't you worry. So for most people, if someone was to ask them, how much do you make on an annual basis? You would say probably what you made last year. And this is where things can go wrong. So say you walked into the bank and they asked you, okay, how much did you make last year? And you said $100,000. Meanwhile, you're a carpenter and your salary is actually $80,000 and you worked $20,000 worth of overtime to get to that $100,000. Well, the banks have specific rules on how they can treat certain income, specifically things like overtime, bonus income, self-employed, part-time, and based on their policy, they have to determine what income they can include. So if you're the one that's supplying that number, this is where things can go wrong. So let's just go back to that example that I just mentioned where you said you made $100,000, but $80,000 of it's your actual salary and $20,000 is actually overtime. Well, if you didn't work much overtime the year prior, we have to take a 2-year average to be able to include that. So say you didn't work any overtime whatsoever, and let's also say that maybe your salary was a bit lower and maybe it was $70,000. Well, instead of being able to use $100,000 like you mentioned and like they would be basing that pre-qualification off of, we'd actually be using quite a bit less. Now, the difference of using $100,000 versus say $80,000 is pretty much $80,000 to $100,000 in borrowing power. So the number they give you could actually be off by a whole $100,000. So it's pretty much useless at that point. Don't get me wrong, a pre-qualification is great if you're just playing around trying to get rough numbers, but it's not information that you should rely on. The last thing I want to mention about pre-qualifications is that even if you get it done at the bank, it's very important that you understand how they review their files. You see, the bank, they are employing those mortgage specialists and they pay them a salary. Now, they don't want to spend their resources on people reviewing files that potentially will never ever go live. So they spend a lot of their time on the actual active files, meaning an accepted offer is already in hand. Now, if you're just trying to get a pre-approval done, oftentimes they will ask you the questions, but they don't actually do a thorough document review. Therefore, the information that they provide is not always accurate, and they're honestly not even liable if they give you the wrong info. Whereas if you go through a mortgage broker, we are completely independent and we are very liable for the information we provide, so we better be sure that it's right. Okay, so moving on to an actual pre-approval, and this is what you're gonna wanna do if you're actually serious about buying a home. Before I dive into that, in the most unbiased way possible, I'm gonna say this once, you should be getting your pre-approval done by a mortgage broker and not the bank. And that is for a couple reasons. Like I mentioned earlier, we have a lot more liability with the information we provide, so you're pretty much guaranteed going to get a more accurate assessment. Not only that, we work with pretty much every bank, and not all banks have the same policies, so you might not fit in the box of one bank, but another bank you might, or you might fit in one box with the bank that you bank with, but a different bank might be willing to offer you more just based on their policies being different. Not only that, typically when you get a pre-approval done by the bank, they're strictly just outlining what your max mortgage amount would be, whereas with a broker, at least I know with my company, we don't just focus on only the max purchase price, we also outline all the closing costs that you can expect. We also outline the monthly payments, the rates, all the different aspects to consider when it comes to choosing the different lenders. That way you know exactly what to expect when it comes time to actually get that mortgage. It's important to keep in mind that both the pre-approval and the pre-qualification are not actually firm approvals, and the reason why is the missing piece of the puzzle is the property. So when we're doing a pre-approval, we reviewed your income, your down payment, your credit, any debts that you have, but we haven't actually seen the property yet. And that's basically just because we don't know what property it's gonna be. So that's why a pre-approval is never actually a firm approval. So keep that in mind, which is always why it's a good idea to include a subject to financing in your offer on a home, even if you got pre-approved beforehand, just to be extra sure in case the lender doesn't agree with that property. It's very rare that this happens, but if there's things like lawsuits against the strata, or if it's run down a little bit, sometimes it can cause some problems. Okay, so like I mentioned, not only does a pre-approval outline just your max mortgage amount, but it's also outlining your closing costs, the top lender choices and rates, and also your potential payments that you might have on a month-to-month basis. That way you can actually establish a good budget and account for all of it before actually committing to buying something. After watching this video, you should have no doubt in your mind that a pre-approval is always a better option than getting pre-qualified. And a lot of people think that getting pre-approved is this long, gruesome process. It honestly isn't. It may be different depending on which mortgage company you go to. I know myself, once we have an application and we have the documents we need, which honestly doesn't take too long if you're being coached through it, which we do help you through it, we can do a pre-approval in less than 20 minutes. And that sends a full breakdown out to you so you know exactly where you stand. And that's honestly not too bad. You're spending 15 to 20 minutes up front to save you a whole lot of headache and stress down the road, and also making sure that you're getting all the correct information up front. With that being said, if you found value in this video, please hit the subscribe button, like this video, and ring the bell to be notified. And if you're interested in getting pre-approved, I'm going to include a link in the description for my contact form. Fill that out, book a call. I'm happy to have a chat with you and guide you on the right direction. Thanks a lot for watching, guys. Catch you on the next one.